Hey traders, Raghee here, and in this recap video I'm going to walk through some very important timelines with you on an S&P 500 ES contract trade we took this morning. And if you follow these particular parameters, it's going to give you a much better idea of when and how to put some of these trades on. So the first thing is you want to at least make sure you're looking at, I would say I'm going to tell you to drop some vertical lines at 2 a.m., 3 a.m., and 4 a.m. Eastern, okay, so New York time. And what this represents is the European UK open, and then 4 a.m. is the Asian close. And then between 4 and about 7, you've got an odd doldrum time between the Asian session wrapping up, Europe and UK getting going, and then waiting on the US session. By 8, we're really getting underway. By 9, we start the countdown to the Wall Street bell. And at 9:30, we begin the clearing, okay? Now, there's a few things to keep in mind. One is the price movement based upon the time of day. And this is something you may or may not have seen before. It's something we do in the room every day, and it is a game changer. Now, what you'll notice here I have are price movement range expectations for the S&P 500, the E-mini ES contract. And again, intraday, I think this is a mistake a lot of traders tend to make. So I'm going to show you how to solve that right now. So intraday, what often happens is traders will start to think about the upper end of volatility, not where they are. So if I'm looking at a trade somewhere around 8 a.m. Eastern, so you can see I'm set on the New York time. If I'm looking at 8 a.m. Eastern, my price movement range expectations are about average 3 to almost 4, 3 3/4 points. So think about that. Now, it's not until 9, 10, 11 o'clock do we start seeing these upper end of price movement ranges. Yeah, a lot of traders will use this range for their expectations and for their stop loss rather than where they are, okay? So let's go back to the setup. So I know that my price range movement is pretty muted until 9 a.m. So I can even change this color just a brighter yellow just to remind myself what time of day I'm dealing with. So 7 a.m. to about 9, I'm going to be dealing with that muted price movement range. And what I want to do is follow the trend. Now, it was most certainly up. So let's kind of squeeze this data in. It was most certainly up, predominantly green grab candles, trading along the dynamic support of the wave. And what we did is we entered a trade at the 26.04 level. So we entered long at 26.04. We knew we'd have to navigate 9 a.m. and 9 to 10 o'clock. This is where the U.S. markets gets going. So we got long at 26.04. So the market continued to climb, and a couple of the traders, these are all different techniques I show you all. A few of the traders went ahead and took more long positions as the market broke out above certain ranges. They played different pullbacks. And then at 11:30, I recommend just not getting flat, but stop looking for new entries between really 11:30 and this is really just a little mini day trading workshop of something we do in the room every day, okay? Until between these two lines, I will not look for new trades between 11:30 Eastern and 1:30 Eastern. And then after that, we can start to reassess. Well, right after 1:30, look what happened. We broke the validity of the uptrend. That means if you took this trade down at 26.04, you would go ahead and take something off the table, or, well, in this case, you can actually look for a second, because look, your trade is still a winner as long as it remains above 26.04. So as long as you still have some room to play with, which you do, you can look for a second entry. So here was your first, and then you can look for your second entry. Your second entry would not be a trend follow, okay? In fact, that Darvis wasn't even plotted, but what you did have, and this is very important, is you did have these levels back in here from a previous Darvis that was in play. So what is nearby? These two levels of support. And as luck and price action would have it, that's exactly where we went. And that's your next buy. That is an oversold fade. It's a fade buy right there. So we started moving back up again and going into the Asian session now. And one thing I want to remind everybody, TradeStation now has day trading margin now in extended hours. Now I mention that because I'm using TradeStation charts. Many of our traders are with TradeStation, and they now have the day trading extended hours, the day trading margin for extended hours. Check the time. I believe it doesn't start till 6 p.m., but check the time, okay? And then you can go back to that 25% day trading margin. So again, check with TradeStation. I talked to Corey over at TradeStation, Corey Andrews at candrews@tradestation.com. And I mentioned this, I don't get any benefit from it. A lot of the members at Simpler Futures have mentioned he's fantastic, so I'm passing that along. I've talked to him, he's great. He takes care of the Simpler Futures folks. We also are able to get, I believe, check with him, a 20% commission reduction if you're a Simpler Futures member. Okay, so this was the winner we took. This was a very nice 21 easy peasy points. And for some of you, you added again at that 2610 area, and that was another 15 points. So you had the original entry at 2604, another entry basically at 2610 and a quarter, and here we are going into the Asian session, looking to see if we can break out again. And because we have propulsion dots, those of you that follow my tops indicators, we could see a breakout going into the Asian session. So there you have it, a little mini ES trading workshop. I'll see you in the next update.